We're in the thick of earnings season, and we're going to check in now with the newly listed MapmyIndia, and we've got the top management joining us right here on the channel. Good morning, Rohan. This is Nantara. So today we're seeing green on the screen. Unfortunately, that's not the case for MapmyIndia, which is down over 5% in trade. Yes, investors are pressing the sell button when it comes to tech-related stocks, so you do fall on the wrong side. But even when we look at the earnings, a bit of disappointment that has come in, right? Because if I were to see the 9-month FY22 basis, the growth is good, but much of that was achieved in the first half. So what exactly went wrong in the third quarter? Because your shareholders are now facing tech falling out of favor plus an earnings disappointment.
Thanks, Antara, for having me on your show. Yeah, you're right. On a 9-month basis, things are looking good on revenue, EBITDA and PAT. EBITDA, in fact, is at 62 crores for the 9-month, and PAT is at 65 crore on a 9-month basis, and these are up 87% and 60% year on year. Quarter 3, two things happened, just to give some clarity. One is on the A&M side, our automotive and mobility tech side. Semiconductor shortage led to drop in automotive sales, and this definitely impacted us for the quarter. Although A&M revenue is up as a contribution to our revenue in Q3, it could have been even higher because we have such a large backlog of orders that we have built up over the last few years. So in any case, this will continue to grow in the future, and semiconductor supply chains will normalize. And on the C&E side, which has been fast growing for the last many years and many quarters, in fact, the revenue can sometimes be lumpy based on some B2B and B2B2C quarters. So you'll see revenue shift from one quarter to another. So what you saw in Q2 may not have shown up in Q3, may show up in Q4. So frankly, we are quite excited about the future. We're sitting on a very large order backlog. And also, but if you look at Q3 on a standalone basis, profit margins were 36%. So we're quite happy that we're able to manage our profitability and our earnings, which, you know, we have already covered FY21 total earnings in just the first 9 months. So the year-end results will still look very good. So we are optimistic, we are confident. But yes, definitely Q3 on a standalone basis, people might look at it with a disappointment, but we urge people to look at 9 months. MapmyIndia is a B2B, B2B2C business. People should look at it on a year-long, year-to-date, year-on-year basis.
Okay, now Rohan, you know, I'm just going to move a little away from the earnings. Some of the things that you said in the run-up to your IPO, mega IPO, look at the oversubscription that you saw, the listing pop as well that we saw from MapmyIndia. What you always said was we stand apart because of the cash flows at the company. But you have also been facing the ire of investors. You know, if you were to just look at the last couple of trading sessions of MapmyIndia, the stock is down more than 20%, right? What's the larger message out there?
Yeah, see, I think what we as a company always say is, look, cash is king, profitability is important, and tech innovation, product innovation is important because that will drive future growth for the company. And I think investors are also looking in a more discerning manner at the overall markets, which companies are profitable, which companies are cash generating. Those give comfort to investors, especially in an overall bearish cycle on a macroeconomic and a kind of a negative mood. So yes, cash is king, profitability is important. Tech innovation is continuously important because that drives the future of the company, and we ourselves are also investing on the tech side organically and inorganically. And I think that's the broader message that maybe everybody in the macroeconomy and markets are saying.
Rohan, hi, Aisha joining in. Just to take that point forward, markets are a very micro beast in nature in that sense, and at least more so off late. Just wanted to understand how many clients have you acquired in the third quarter, and what's the order book visibility now that you have? If you could just spell it out in numbers.
Sure, absolutely. I mean, see, lots of interesting customer wins on the automotive and mobility side. A leading European four-wheeler went live with our navigation just this last quarter. So those revenues will also grow. Two two-wheeler OEMs, one for electric vehicles and one for motorcycles. We won last quarter. And then on the EV side, a commercial vehicle OEM, a EV infrastructure provider, these guys have latched onto our EV solutions. A shared mobility platform of ours is now with a large taxi company, and the Ministry of Road Transport and Highways have tied up with us to promote our consumer app because this provides ADAS or driver safety alerts. And then on the CNE side, the government's largest health agency has now tied up with us for our APIs and maps for India's public health services. A fintech super app, in fact, Bajaj Finance is now using MapmyIndia, and a publicly listed QSR company is using MapmyIndia for location intelligence to figure out which sites to invest in to expand profitably their restaurant locations. There are many wins that we've had on the customer side, A&M, CNE, at least 10 large new clients, and then many on the long tail as well. So that's what's exciting to us. Order bookings are also growing quite healthily. Just to give a sense, historically we signed up new order bookings of 270 odd crores in FY20, 460 odd crores in FY21, and in the first half of this year we already had 250 odd crores of order booking. So that backlog of orders is looking quite healthy, and as we've said before, these translate into revenue in the time to come, and so that's why we are optimistic about our future.
Okay, Rohan, like I said, you're on the wrong side of the tech sell-off. I apologize for coming back to that again and again, but that is, of course, the larger story. We've seen, counters in the Nifty 50 that have come out with good earnings, and, the markets have not reacted simply because of the larger flavor. So once again, for your shareholders, why are you different from the other startups? Why are you different from the other recent tech listings and the new age companies?
Yeah, I think our shareholders understood during the IPO process, as well as hopefully continue to understand, that we're such a unique company. We're the only company that has built India's most comprehensive digital map data product, as well as platform. So we're a mass SaaS and SaaS play with a large addressable market ahead of us. We're uniquely positioned, and the government's geospatial guidelines restricts foreign entities from doing various activities, like even doing vehicle-based ground survey. So they can't even create or collect or then update their map data to be accurate in future, let alone what they cannot even deal with or resell finer data for high definition or 3D. And these are all areas that MapmyIndia is very strongly positioned for. On a 9-month basis, if you look at, actually, even if you look at Q3, our profit margins are 36%. We are generating cash. We have already covered up FY21 in just the first 9 months of FY22. So the fundamentals and the technicals, the financials, and the business and operational sides of our company are individually also quite unique. Definitely, we've messaged before also that if you want to understand MapmyIndia and you want to take a right call on MapmyIndia, don't look at just quarter versus previous quarter, quarter versus previous year quarter. Look on year to date, year on year basis, and look at the innovations we are doing. That will give you a sense of where we are headed in the future. And so, it's the first time we have come out with quarterly results after having done the IPO. I would say definitely shareholders, to understand a company better, or even prospective shareholders, should see for the next few quarters how we perform and how the things shape up. And I think that will give them a lot more perspective. And hopefully already they see that even amongst this earnings in the tech space, we are definitely unique, being profitable and cash generating versus many others.
Okay, Rohan, great to chat with you, and we'll chat again soon, I guess, before your next quarterly numbers.
Yeah. Thanks so much for the opportunity.